Hi, it's Jack here at System Trader, and in this very short video I'm going to show you how adding a very small amount of Bitcoin to our passive portfolio, and not only passive portfolio, is influencing the end result, the performance of the overall portfolio. So let's get started with some classical approach, and there we have 70-30 portfolio in which we have 70% of S&P 500 equities, and then we have 30% of 7 to 10 year treasury bond ETF. And such portfolio from the mid 2010 till the end of October 2021 made on average annually over 12.7%, which makes from the initial $10,000 $38,000 at the end, and the maximum drawdown was 22%. This is a very short history because now I'm going to add the Bitcoin, and the Bitcoin history is very short. Therefore, we have to start from the mid 2010. And the remark here is that we need to take into account that during that whole period, stocks had a very good time because basically there was a bull market. Of course, we had some corrections, especially in February, March, and April 2020, the COVID-19. But basically from 2010, actually even before 2009, there was a bull market on that there, and also the bonds, they had a pretty good time. So basically overall there's a very decent result. But now let's see how that result will change if we add a bit of Bitcoin. And now, instead of 70% of S&P 500, we will just make a small portion of 5% for Bitcoin, so that we have 75% of the S&P 500, 5% of Bitcoin, and then, as before, we have 30% of bonds. And how that small change is affecting the portfolio? Well, pretty much, because just to remind you, before we had from 10,000 at the end $38,000. Now from 10,000 we have at the end $86,000, which is doubling that result without Bitcoin. And just as I said before, we have only 5% of Bitcoin. Again, this is just the history, it's just a backtest. I'm not saying that the next 10 years will look exactly the same. What I'm just only showing is that you don't have to risk the whole capital you have, putting all into cryptocurrencies if you want to invest on that market. But even adding a small portion of your capital, like 3% or 5%, like in that example here, is allowing you to make profits on that market if that market will go again up so heavily in the future. By the way, here we are doing so-called rebalancing, and every month we are checking if any of this element is deviating by more than 20% either way, up or down. And if so, let's say that Bitcoin was heavily going up, then we are selling Bitcoin so that it's again 5%, no more than 5% in our portfolio, because with that pace of growing by Bitcoin, quite soon that portfolio would be dominated by Bitcoin, and this is not what we are looking for, because we want to just keep that risk under control. Therefore, if this is going too high, then we are trimming, let's say, Bitcoin in our portfolio, and the opposite. If Bitcoin will go heavily down, then we will sell a bit of stocks or bonds and add a bit more Bitcoin, so that it's always more or less 5%. And such simple thing is working, and I think that whoever is willing to invest on that market should have a plan and risk under control. But this is a passive portfolio. I will show you another example where, in fact, you can use the dual momentum portfolio, in which you have in your portfolio either, let's see here, either Bitcoin or bonds. And here I have ETF AGG. So basically, how it works. Each week we are checking the result, the return of Bitcoin and bonds for the last month. And we buy or we hold in our portfolio whichever is having a higher return. So basically each week we are checking such simple condition. And if, for example, in the last month Bitcoin had a higher return than bonds, then we are buying, or if it's already in our portfolio, holding a Bitcoin in our portfolio. And the opposite, if bonds would have a higher return, because, for example, Bitcoin is in downtrend, then we will hold in our portfolio bonds. And I'm not saying that this is an ideal use case for that particular strategy, but just to show you that even simple things can work. And indeed here from the mid of 2010, we have from initial 1,000 just some crazy amount of money because the annual rate of return, compounded annual growth rate is 263%, which is crazy. So as you can see here, from initial at $10,000, you have such a big amount here in billions actually. And by the way, we were able, even with such a simple approach, beat Bitcoin market itself, because we have almost 20 percentage points higher compounded annual growth rate. And we also have a smaller maximum drawdown, 70% versus 93. And by the way, this is still very, very severe maximum drawdown, but still smaller than on Bitcoin itself. But as I said, it's definitely not an ideal strategy for that market. I'm just only showing what I have currently on within my software, so that you can even by yourself experiment a bit. But in the coming months, I'm going to introduce new strategies in the System Trader software, so that you can use it more effectively with cryptocurrencies if you are interested in that market, where it's more specifically designed towards that market, which in fact should heavily decrease even that maximum drawdown, although it's already smaller than on the market from Bitcoin, but it will be even smaller than that. So then I will make another video and I will show how you can approach trading cryptocurrencies. But just to make a clear remark, I'm not an expert in cryptocurrencies, and I'm not even trading or holding in my portfolio cryptocurrencies. I'm a quant, so basically I prefer to follow a strategy which is a clear algorithm, which is saying buy or hold or whatever, rather than take the decisions based on my discretion by reading some news, or not to mention the emotions, which are very bad if we are taking decisions under influence of our emotions, because then we are not thinking in the best way to take important actions, especially when the money are on the table. Okay, so that's it from my side. I encourage you to download your copy of System Trader and just give it a try and make your own experiments. Thank you so much. Bye-bye.